Hello and welcome to our session on building digital trust in a transformed world. I'm Devin Banerjee, a senior editor at LinkedIn, where I oversee our reporting and curation of financial services news and views for LinkedIn's 740 million global members. To discuss today's very timely and important topic, we're very pleased to be joined by Nisha Hathi. She's Executive Vice President and Chief Digital Officer at Charles Schwab. Nisha, welcome, and it's great to see you.
Nice to see you too.
Let's start, Nisha, just by telling us what the Chief Digital Officer does at a large institution like Charles Schwab.
Yeah, well, Chief Digital Officer can mean a lot of things to a lot of people. So I can talk about what it means at Schwab. And at Schwab, the team that I lead is really responsible for defining our digital transformation strategy. And that means, what we do as a company, how do we kind of stay on top of trends, but also what are the services and capabilities that we introduce to our clients. And basically, how do we make investing more accessible for everyone?
Fantastic. Well, several topics there you mentioned that we will dive deeper into. Before we do that, I just want to set the stage a little bit and talk about the context around this conversation. We are here today talking about building and retaining trust in this transformed world. And if you think back over the past 10, 11, 12 months, this pandemic has really put trust to the test. If you think about the underlying health crisis that we have gone through and continue to go through, the economic downturn, the jobs crisis, amid all of that, a social and racial justice reckoning as well across this country. Some would say there has been an epidemic of misinformation and widespread mistrust, fueled by that fear of the unknown in some of the most personal areas of our lives. And in fact, according to research from Edelman, trust in all information sources has hit record lows right now. People are turning to their peers and social communities as their most trusted sources of information. But suddenly business is finding itself in a very interesting role where consumers are turning to them to fill the information void. According to the 2021 edition of Edelman's Trust Barometer, 61% of Americans say they feel business is the most trusted institution. That is replacing government and even the media. Looking deeper among industries and sectors in the business world, technology is the most trusted sector right now, and financial services, while not highly trusted on an absolute basis, has jumped about 8 percentage points itself over the course of the past decade. So it stands in a very different position during this crisis than coming out of the last crisis, which of course was financial in nature. So this presents a very unique opportunity right now for the business world and the financial services industry as part of that to build trust and to retain trust. Nisha, to start, before we get into trust, I want to start with the second half of our session title, which is that transformed world. I know that you and your team monitor how this industry, of course, the financial services industry, is always transforming. What are some of those key areas where you have seen transformation and digital transformation accelerate over the course of the past year?
Yeah, well, I think what we've seen over the last year is really kind of an acceleration and the collision of a few trends that were already underway. So the first of which, and maybe the most obvious, is just digital adoption and digital engagement. I mean, when everyone's stuck at home and can't do things in person, face to face, everyone is online. And just to give you a sense, on our Schwab platforms, we had 2.3 billion interactions last year, billion with a B. And if you think about just the magnitude of engagement that we're seeing, it's pretty dramatic. We also have a population. We've always had a pretty heavily digital population, our client base. But we saw this big spike in mobile usage, for example, up over 50% from the previous year. Again, like a part of that digital acceleration that's happening in that mobile device usage. And then, of course, we've seen kind of the other side of this pandemic is this kind of growth of new investors coming into the industry. And, for years, we wondered if younger investors would be attracted to investing. Actually, younger consumers would be attracted to investing. We don't talk about that anymore because now we've had this surge of new folks coming in. I think last year we introduced over 800,000 new households into our retail business. I mean, I live in San Francisco. It's basically all of San Francisco. So if you think about those numbers, the magnitude is significant. And that's, I think that new investor base coming in, I think they also have another trend that kind of is related is this focus, and you touched on it already, this focus on health and wellness. And, if you look at the research, while the pandemic has created concerns about people's physical health, the financial wellness has actually been top concern because of the things you mentioned, right? Will I have a job? Will I have enough savings to actually get to my goals, or maybe even make it through the next few years? And so that has really been a big surge and a big driver of what we're seeing in terms of engagement. The media talks a lot about the kind of the day trading, which is certainly something that's a dynamic, but we actually see growth in, for example, the use of digital financial planning. So we have a free capability on our Schwab.com site, and we have a lot more usage of that as investors are trying to figure out, well, I just don't want to buy a share of Amazon. I actually need to figure out this whole investing thing, and how do I go about doing that? And then I think the third is just rising expectations. And this is an acceleration, but just this rising expectations about whether it's the digital experiences that people seek, the integrity of the institution that's offering those services to them, the transparency, how does it align with my values, and just maybe an overall kind of feeling that I should be getting more. I should be getting more for what I'm providing and doing as a consumer.
Yeah, absolutely. And as you know better than anyone, over the past decade or so, we're seeing so many new entrants into this space, particularly from that technology sector, both at a startup level and among some of the big tech companies themselves, offering financial services and products. Now, Charles Schwab is a brand name. It's a household name, been around for almost 4 decades. How, from your vantage point and your experience, how do the incumbents in this space, the established brands and institutions, how do they compete on trust with these new entrants and these startups? Is it a threat, do you feel, to the trust that established brands like you have already built?
Well, I think in financial services, first of all, I think that emphasis on trust is at a different level. I mean, I think, you might be willing to try a new app to, order your takeout, but you might be much less willing to try something new when it's like all the money you've saved up, right, over the last few years or the last many years. And so the level of trust that an individual has to have in the institution is certainly different. And I think in many cases, that trust is earned over a long period of time. It's, I think of it as a marathon, not a sprint, right? And it can be damaged very quickly with a misstep. But all that said, I do think, and you're right, that, the way that people build trust, how they decide on who to use is changed. It's not necessarily, the big brand anymore. For some people it is, but for some people, they're going to go talk to people that they know, or just, look at what's going on Reddit, right? And figure out what's popular and what are other people saying. And even people that they don't know are sources of recommendations and advice and guidance. And so I do think that the ecosystem has changed, where the brand is no longer the only factor, and that we have to look at other factors. We have a guiding principle at Schwab that's called actions matter more than words. And I think that really plays to this long game that I believe that we believe in, which is that it's important that a firm's actions are consistent over the long run. So our mission, you said, over 4 decades, our mission has always been about educating investors, empowering them, providing them with services that used to be only accessible to the uber wealthy or institutional part of our world, and being able to provide that. And I think being consistent with that over the years is certainly the way that we kind of build trust. But I think that we also have to kind of send specific signals that we are here and we are a trustworthy firm. So I think about one of the things that we offer is a satisfaction guarantee, which I know sounds very obvious. Like if you go into Nordstrom and you don't like what you bought, you can go back and return it. Well, in financial services, that's actually not how the industry has typically worked. And so a few years ago, we introduced a satisfaction guarantee, which means basically that if an investor doesn't have a good experience, we'll return any fees that they paid. And it sounds like a kind of a fundamental, foundational thing, but it actually is a real important signal for someone to say, hey, this is a firm that I can trust, because they're going to pay me back if I don't like the service that I experienced. I think those are the kinds of signals. And I agree that it's not necessarily, I think the ecosystem of startups out there is a fabulous way to kind of generate more innovation when everyone's working on behalf of investor or an investor or an advisor, we have even more innovation going on there, which just kind of spurs the whole industry to do better.
Yeah, absolutely. And a really interesting definition you mentioned of trust, because Jeff Weiner, who's actually our executive chairman here at LinkedIn, he defines trust as consistency over time, which is very similar to how you just defined it. So clearly, those who have been around for a bit longer and built up that trust do have a leg up. But let's talk a little bit about those clients of the future that we have always been talking about, or at least over the past 10, 15, 20 years with talking about millennials and Gen Z and their appetites and behaviors. They are here now. Of course, the millennials, but now the Gen Z has entered the workforce. They're beginning to earn, thinking about how to budget, how to save, how to invest. And if we're honest, some of these startups have thought a bit more about that user experience, that user interface, and are trying to appeal to that younger generation. How do you think, from your experience, financial services providers, not only earn the initial trust of these new members of the workforce, but also become nimble enough to adapt along with them?
Yeah. Well, I think, even for whether it's a Gen Xer or a Boomer or a Gen Z or millennial, I think that consistency and action over time, I think, is foundational, right? So that's the core of everything. But I think, one of the things that I believe that many financial services firms maybe haven't done as well in the past, larger institutions, is really, really understand the younger investor and have a passion for serving the younger investor. So not kind of say, well, this is what we offer for everyone else, and so it should work for the younger investor, but really actually truly try to understand that the group. And I think that means, understanding, for example, that, digital experiences are not the only experience that younger investors want. Actually, the research will tell you that younger investors, just like any other generation, when they want to make a big decision, they actually want to talk to somebody, right? And so I think it's really understanding the investor at a deeper level. One of the things that we introduced last year was an experience called Schwab Stock Slices. And it essentially is a fractional share trading capability. And part of the rationale for launching that offer was because we had younger investors who wanted to diversify their portfolio, but you can't, you buy one stock of Amazon and you kind of need a lot of money, right, in order to have a diversified portfolio. And it allows investors to get in and diversify at a much lower dollar level. A few $100s, you can have a diversified portfolio and grow it from there. And so I think having services and capabilities that really meet the needs and you understand the needs, you meet the needs. And then I think there's another aspect, which is kind of maybe working past the generalizations and the misconceptions of the younger investor. And, I think part of that is, not thinking of it as one homogeneous group, recognizing the diversity of the group and really trying to develop experiences that work for the different segments, the different groups, populations within that younger investor population. But it is something, I think we think about quite regularly. And actually, I feel very privileged that we have a team which is comprised, we have many, millennials on our team who have a deep understanding of, their counterparts out there that are trying to understand investing and that are earlier in their investing lives. And that's how we can better understand where we should go, is by really having those people on the team.
Yeah, absolutely. And in a few minutes, we'll get into that human capital element of how to attract that kind of talent into this industry. But I want to focus on something you mentioned, which is some of these recent innovations that you've rolled out. You've done it successfully in quite a large institution. How do you establish that culture of innovation in some of these larger institutions that can help you kind of be nimble enough, as I mentioned earlier?
Yeah. Well, I feel, lucky that when this firm was founded, right, it was always founded with a very strong purpose. And that was really this, client obsession is what it's called now. I think we used to call it client centricity back then. But it really is this focus on the client. And I truly believe that when you have a firm that's uber focused on the client, it kind of liberates everyone to innovate, because you're not actually worried about, oh, well, this product is going to cannibalize that product. Or you're really just thinking about, well, the client needs this, so we better go build that. Or we better go partner with a startup, or we better go do an acquisition. Like we did an acquisition of Motif Investing last year because we saw something there that was really powerful. And then what we have is the know-how, understanding of the investors, and the scale to get those innovations in the hands of millions of investors. And so I think it's that combination of a culture of really, really wanting to serve the client, understanding them, and then being very, almost using all the different execution options possible, building, partnering, purchasing, to actually execute on delivering those needs. And I think that gives us that agility and the nimbleness that you're referring to.
Yeah. So let's spend a couple of minutes on talent. I think one thing that the incumbents in the financial services industry have perhaps not struggled with, but they do have to spend a lot of time thinking about how to attract this kind of talent, whether it's technology-minded talent or younger talent, new grads into this industry. When the big tech companies or the startups are also competing for that same talent. What are some best practices you've learned in terms of attracting the best and brightest to this industry right now?
Yeah, well, the role you mentioned at the beginning, my role right now is a chief digital officer. But I've been at Schwab for many years and been in a lot of different roles. And when I was asked to take on this role and lead an enterprise around digital, we had to do a lot of hiring. And that was actually one of the questions I asked myself at the beginning is, how are we going to go out there and compete? And what's the value proposition that we offer to an employee, to someone graduating from school, someone who's later in their career? And I think, what I have been so happy to see is just how much the purpose and what we do every day resonates. Because I think, it's one thing to be working on, a feature to make checkout more seamless. It's another thing to be working on, a social media site and working on a widget. But when you're working on, let's say the digital financial plan I mentioned, you're working on something that is potentially going to change someone's understanding of their whole financial life and potentially help them get to goals that they didn't even know they could achieve. And so there's real meaning behind that. And I think what we see is, we do have folks that come in right out of school, whether it's undergrad, graduate school, whatever. But we also have, I think we do really well with folks who, for their second job or maybe their third job. So after they've actually worked in maybe a large tech firm or, we recruit from all different industries. They kind of think about, well, what do I really want to do with my life? How am I going to have impact? And I think that's where we really have something that I think is special and unique because of what we do and how we serve investors. And then I think it's about creating a culture around innovation and really kind of empowering the team because, we don't have a playbook to follow at this point. We need to define the future for investors. And so I think that's energizing and exciting to people who really want to make a difference.
And what are some of those skills that candidates and people that you're hiring possess? How have those skills evolved over time? The skills required to be successful in an industry like financial services, which, perhaps for a couple decades had a similar skill set over time. And now, as we've talked about, is changing so rapidly.
Yeah. Well, I think that passion and client purpose is just core. And that's always been, that kind of doesn't change over time. But I do think that some of the things that change are the amount of transformation that's going on, to your point around the industry, means that, we need people who are really adaptable, that are really creative, that really kind of are intellectually curious about the opportunity that we have in front of us and kind of have that learning mindset. Because, we have one of the areas that we really built out over the last few years is our user experience, user research, experimentation, that kind of part of our team. And, you're going to do a lot of things. You're going to try a lot of things and not all those things are going to work. But you have to have that mindset that you're really kind of focused on the client need, you understand them, and you're going to keep working at developing new ways to serve them. And that takes, I think, a certain level of curiosity, adaptability, and probably some resilience and kind of, wanting to solve the problem and having that passion.
So, Nisha, I mentioned at the outset that trust in the financial services industry specifically is kind of at an inflection point. It's actually up 8 percentage points over the past decade. And last year in 2020, it hit an all-time high as there was a lot of trust in banks and lenders, for example, that were rolling out relief measures around the pandemic, et cetera. One of the takeaways from Edelman's research is that trust across industries, but in financial services as well, can be quite fragile, and retaining that trust actually takes as much work, maybe even more work, as building it in the first place. I'm curious, as you look forward through the rest of 2021 and beyond. What are some of the steps that are top of mind for you and your team around retaining the trust that has been built?
Yeah. Well, I think, when I think about digital experiences, there is really, great digital experiences are kind of table stakes. So we need them to be consistent, transparent, intuitive, but that trust comes from human interactions, that trust that comes from human interactions. I don't think you can overstate how important that is, because at the end of the day, I was reading this great article in Harvard Business Review around when do we trust AI, artificial intelligence, and then when do we trust people? What kind of decisions? And essentially, the research was showing through a number of studies that they had done that it's when it's utilitarian value, so essentially, functional, practical aspects of a product or service, that we trust AI. And then when it's hedonic value, right? So experiential, sensory, that's when we trust people, right? And you could say, well, financial services, that's pretty practical, utilitarian. But the fact is actually our relationship with money is actually as much about the heart and our emotions as it is about the head. And so when I think about, the opportunity in front of us and how we retain that trust and build it over time, I do think it's that kind of, that really unique combination and optimization of technology, digital experiences, and people, that human capital, and bringing those together in the right way, that's going to be the most powerful and effective and sustainable. Because I don't think it's just about having great digital experiences that just work, because it's too much of an emotional topic, and there's too much more to it. The question behind the question behind the question that you have to get to in order to really kind of build the trust and then retain it.
So you don't agree with those who see a future where human advice plays no role and has no value?
I don't. I mean, you know what? Maybe one day, right? Maybe one day we'll get artificial intelligence and machine learning to a point where we can do that. But I do think that there's something, I'll give you an example. When we have times of market volatility, we get a lot more calls. In 2020, for example, in one of our offers, Schwab Intelligent Portfolios Premium, where you have access to a certified financial planner, appointments went up almost 50%. And why did they go up? They went up because there's volatility in the market and people just want to talk to somebody and just say, should I do anything? And typically they're in a diversified portfolio. All we're there to do is tell them, hang tight, think about the long term, don't do anything drastic, right? And so I do think that kind of validation, confirmation is such an important role to get to help people get to where they really are trying to get, and not to overreact when, especially in the world we live in today, there's lots of news that might tell you to react.
And I've heard, Nisha, so many people in this industry have to think about that feedback loop from their customers and their users, and how they can learn from their behavior, their activity, how they can glean insights into what their users want or what they might want and don't know yet that they want. What are some best practices around that process?
Yeah, well, the data aspect and how we leverage data about our customers to create what I call cool, not creepy experiences is a real, I think, interesting area. And one of the things that we really think about is, where do we create experiences where an investor is going to assume that we know something about them? And then when do we kind of go to a line where they're like, "Ooh, how did they know that about me?" Even if they've provided that information to us during their account open process. So it really is about thinking very carefully about the expectations that the consumer has, and then leveraging this treasure trove of data that we do have about the consumer. Because I do think that there's an expectation, as we talked about earlier, that we know them, and we do, and we need that to come through in the digital experience.
Yeah, that's fascinating. Well, Nisha, we've covered a lot of topics here today. We've talked about earning trust in this transformed and continually transforming world, some of the key drivers behind that, how technology is changing this landscape, how the demographics and expectations of investors are changing at such a fast clip, what the implications are of that for human capital and talent management. I really want to thank you for your time today.
Yeah, well, thank you. Great to be here.
So we're going to leave it at that. Thanks to everyone who tuned in for today's discussion at South by Southwest. If you want to continue the conversation, you can follow both Nisha and me on LinkedIn. And with that, we will end the session there. Take care.